This is the Orderflows Market Review for April 27, 2016. My name is Michael Valtos. I'm the founder of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so today, April 27, was the FOMC announcement, and basically they came out and said there's no pressure ahead for a rate hike. And they held rates steady. They said the assessment was not really upbeat. Economic growth and household spending both slowed. There was one area of strength that the FOMC cited, and that was housing. And earlier today, there was pending home sales confirmed that assessment. So, what did the market do? Well, the Dow showed not much reaction. I think it was up just 0.3, just above 18,000. Oil ended near $45.50. It fell initially on a build in weekly inventories, then rallied following the FOMC announcement. So, from a trading standpoint, what did that give you? Well, okay, just going back, just sort of looking at it pre-FOMC, where it was market trading. 1 o'clock is when the announcement came out. So, it's one of those things, I'm not looking to trade around, just ahead of that announcement. There was some trading opportunities, but, you got to be careful. Because, if you're going to be holding a position through the announcement, that's not necessarily something you want to do. Now, again, this was the 3 in a row setup that I often talk about. 1, 2, 3, get a pullback here, and it sells off. This is at 11:45, 12:10, 12:20. It's something you got to take into account. Are you going to be looking to hold it for the next 40 minutes or not? If you are, you're going to be going into the announcement. So it's you can't take the trade. Look for it to happen within the next 15, 20 minutes. But, if, going into the announcement, I don't think you want to be in any position long or short. So the announcement came out. You can see the market really jumping around, not much liquidity. This is all within, seconds here. You see all this happening. So, once the market settles down, we started rallying. Okay, we took out the high. We hit the high here at 88 3/4, came out later, took it out a little bit later, went up to 90 1/4, and started coming off. Okay, so coming off, you see selling imbalance, you're thinking, hey, maybe it's really starting to sell off, but then we turn around, we rally back up. It's a day where there's going to be a lot of volatility into the market. And, later around 2:23, we hit another high at 20.94. Okay, now, what I want to talk about is this time period. It's very interesting. Okay, so we hit the high, we have a divergence, we come off, come back up to the high, get within a tick of it, start to come off, and then we hit the high again. And what do you have here? You have a divergence, you have a ratio bounds low indicating heavy volume right up here on the high. So that's two things going for you. Okay, so maybe you're not convinced that this is the high that's going to hold, especially since, we had kept rallying and we kept making new highs post FOMC. Well, what happens in the next bar? Two things. You have a single print, which is again bearish. So you have a divergence with a ratio already, which is a sign that, hey, look to get short. But, maybe you're not ready to get short just because, the market's been jumping around. And, every time it hits a high, it comes back later and takes out a new high. This time, you have a couple things going for you. So, like I said, maybe you're not convinced. You wait for the next bar. Now you got a single print, again, which is bearish after the divergence. Divergence on the high. So, now you got three things. And then what else you got? You've got the Delta Scalper kicking in, which is telling you there's a shift. Sellers have really started taking over the market. And, so you got divergence, you got ratio bounds low. Next bar, you got a single print, with a nice ratio, and you got the Delta Scalper. I mean, it's really the first time you had anything. You're hitting these highs before, on nothing. That just average numbers. It's a black number, so it's an average ratio. Here you have a doji, so you don't have any ratio. Here you just have a divergence with no ratio. And, this time you got divergence ratio. Next bar, you got single print ratio and Delta Scalper. And, where's the trading here? It's trading around the 90, 92, 93 level. So, you got opportunity to get short, around 92.5, 92 even, in this next bar. If you're getting short, say you just sell right at the low at 91.5. You take a half point and a quarter risk, and what happens? The market just sells off beautifully. So you're talking 92 down to then you get a selling imbalance in here. When we're going trading 88 before we start hitting a few bullish ratios. That ratio bounds low. You have a single print, and then it goes sideways, and then you get a Delta Scalper buy. Right here, right after the cash close. So, I mean, I don't know if I would have held it all the way to the cash close, but, there's plenty of opportunity getting, like I said, getting short at, 92-ish, that area, down to, the 89. Then it starts rallying back on this, you got this Delta Scalper signal, you got a couple, bullish ratios. But I don't know if I'd just be happy with this one trade. You got you got a lot of selling imbalances in here, which is adding to the, heading to the your bearish position. So, that was to me really not the best trade. I mean, there was the 3 in a row earlier before the FOMC, but I think this one really set up better. I mean, that's the power of the Delta Scalper. You see you're getting short right here, and even if you're holding it to the next signal, that's a good 3 points. Then it takes the next signal back up to your entrance price. So, thanks for watching this video. Right now I got a special offer on the software. If you're interested, send me an email, mike@orderflows.com, subject line special offer. So thanks again for watching this video. To learn more about trading with order flow and the software used in this video, be sure to visit my website, www.orderflows.com.